All right, welcome to our channel. Today, I'd like to discuss with you Social Security income and how that might affect your ability to apply for Section 8 housing or federal housing. And also, this will include Social Security disability, and survivor benefits. We're going to go over policy and procedures to give you a better idea of what your opportunity and chances are in dealing with low income housing, affordable housing, Section 8 housing, Housing Choice Voucher, and many other programs that the U.S. government affords under the Section 8. All right. Before we do that, I'm going to switch over screens real quick and I'm going to give you a little company information just in case you guys have additional questions. And you'll see my face up to the right. So there's our company phone number and web address, as well as email. You may need to enlarge your device in order to see it, or you can find our information in the comment section below. But moving on from there, just keep in mind our office is by appointment. Those appointments do cost money, and they're relatively inexpensive. But let's move on to notes here. So I'm going to bring in some notes for those of you that have a learning disability, or maybe I'm speaking a little too quickly and you like to recap what I've talked about in this video. So moving from there, yes, Social Security benefits generally count as household income when a public housing authority determines eligibility and calculates your rent. However, receiving Social Security does not automatically disqualify somebody from Section 8. In fact, the highest known payment that I've ever heard of was around $3,500, and that was from the 80s when there were some exceedingly great examples of high Social Security payments around 3,500, and even those folks would have qualified. So therefore, I believe all would be able to qualify. And obviously, being somebody that is 62 years and older with Social Security disability, or survivor benefits would very much qualify for this as low income. So HUD generally counts the reoccurring monthly payments from Social Security retirement, Social Security disability insurance, better known as SSDI, supplemental Social Security SSI, and Social Security survivor benefits, Social Security dependent or child benefits, and Social Security benefits received by another household member. Okay. And the Housing Authority normally uses the gross benefit for Medicare premiums and other deductions, not merely the amount deposited in the person's bank account. And if you'd like to take a look at HUD's policies and rules towards this, I will also post a link again in the comment section for the notes of this, where you can read HUD's EIB guidance guide. It covers quite extensively the topic related to incomes, assets, as well as the rules for this. An important terminology is SSI means supplemental Social Security. SSDI is retirement benefit for Social Security benefits, but they are not SSI, obviously. So the initial eligibility, let's talk about that a little bit, adds up. So for new Section 8 applicants, the Housing Authority generally adds the countable income received by every assisted household member. So in other words, your family composition, how many people are in the house, and everybody's total income, including Social Security and so forth. It converts the monthly Social Security benefit into annual income. In other words, if you receive $1,000 a month, they're going to total that out at $12,000 a year and look at it from that perspective. Number three adds wages, pensions, and other countable incomes. So if you're not clear, there's around 14 pages of both income, assets, and deductions. So you may need some help with that. If you do, you can reach out to my office or any other qualified professional. Okay. Most regular housing choice voucher applicants must qualify as very low income, although the PHAs must target most admissions to be extreme low income household, which obviously, if you're receiving Social Security, disability, or Social Security, the regular version of it, then you would likely fall in that category. And so you can also look at HUD's HCB eligibility guide, which I'm going to post a link for that as well. Keep in mind, those are broad strokes because every single housing authority bases the rules, policies, and procedures on the local community. And so if you lived in somewhere in New York, things are supremely expensive. And where you might also have somebody that lives somewhere in a small town in Louisiana where everything is relatively inexpensive. And therefore, what they consider a high income and a low income is going to change depending on what parts of the country you're in. And that's why it's very useful to have HUD's HCB eligibility guidance for this. Also, you can look at the official 2026 limits, which are available through HUD's income limit payment system, and that will pretty much tell you where you need to be with this. So let's go on to an example. Assume that one person or an applicant receives roughly 1,400 in Social Security and no other income. This is how they would calculate it. The housing authority would generally begin with 1,400 times 12, and so your yearly income would be 16,800, and that would be what they would consider as your total income. Now, I can tell you, at 16,000, you're definitely going to be in a low income category. In fact, I would say, even in the most small state in the poorest community, I think the lowest threshold before you would actually exit out of low income would be around 24,000. That number could be much higher in places like LA and New York. So, how Social Security affects the tenant's rent? So let's talk about that. Social Security affects how much a voucher participant pays. So let's look at this. So if you're receiving $1,000, then what would happen is you would pay 30% or 300 of that thousand, okay? And then the PHA or Public Housing Authority would supplement the other 70%. Now that can change depending on whether or not you're still low income or you have a higher income. The higher it goes, the more of your income you're gonna have to pay. So it's perfectly possible at a maximum you could be paying as much as 40% of your income, but it's highly unlikely for people that are in the category of fixed income and Social Security checks. This is more people that have multiple forms of income. So you should probably expect you're going to remain at the 30%. So also, it looks at the family's deductions, applicable minimum rent requirements, the utility allowance, PHA payment standard, the unit's gross rent, and whether the family selected a unit above the payment standard, obviously. So, of course, additional people in your home is going to change the amount of income and yearly income they're going to look at, and that could ultimately raise you from extreme low income to just ordinary low income. The official total tenant payment calculation is generally the highest applicable amount among the 30% adjusted monthly income and 10% of the gross monthly income, plus welfare rent where applicable, or the PHA's minimum rent. And for that, you look at HUD's rent calculation guide. I know it seems like we're going down a little bit of a rabbit hole with this, but the important thing here is, for the most part, you're looking at the 70-30 rule. It's 30% of your income, 70% is being subsidized basically through the government. However, if you've got other factors to be considered as income or additional people in the household making money, then this is going to change. You're probably going to need help with somebody like my office when it comes to looking at assets. And also, if you have a larger composition or more people in your household than expected. Also, again, there's going to be income and assets pages for this, and that's around 14 pages. So the official total tenant payment calculation is generally the highest applicable among the 30% adjusted monthly income at 10% gross monthly. And so we covered that part. And so, again, I would encourage you to go over to HUD's rent calculation guide. So, therefore, the increased Social Security will usually increase the tenant's contribution, but not generally the dollar for dollar amount. Deductions for elderly and disabled households. So, let's talk about that a little bit. An elderly or disabled family deduction may be considered certain reimbursements for health and medical expenses, Medicare premiums paid by the household, certain disability assistance, attendance care, and auxiliary apparatus expenses. In other words, if you have a medical equipment or otherwise, dependent deductions where applicable, and in some cases, even the cost of your prescriptions and other medical required equipment. I'm sorry. And so Medicare premiums are not simply subtracted from Social Security benefit before the income is counted. HUD generally counts the gross benefit, then considers eligible Medicare premiums under the medical exempt rules. And you would want to take a look at those under the current policies that they have under CFR 5609. And so expenses paid by Medicare and insurance company, a state Medicare savings program, and other source cannot also be deducted by the tenant. So it becomes a little bit contentious. There are many things that can be deducted and some that cannot. So if you run into trouble with that, I'd say reach out to my office or another, qualified professional to help you figure out what you've got going on. Okay. Our Social Security payments counted. And so I think we've kind of covered that. And I want to include again CFR 24, Code of Federal Regulation, Title 24, 5-609 should help you in that respect. And so it looks at all those calculations. What happens when Social Security increases? Well, you can look at that as being negligible, since the amounts that it typically goes up is only about a small percentage, or maybe up to $100, then it would only change the outcome by a few dollars. So I wouldn't be supremely concerned over that. However, you may want to review the annual Social Security cost of living adjustments, or COLA, and or counted changes in income, as housing authorities use Social Security information available through HUD's Enterprise Income Verification System, and maybe also request a current SSA benefit letter to reflect the change in income that must be reported under your HAP contract. And also, the last consideration here is going to be important 2026 HOTMA transition, which means new rules. So as of 2026, Section 8 programs are still transitioning to revised HOTMA income, deduction, and rule assets, which we have yet to get a solid copy on. HUD announced that it will enforce full compliance with HOTMA 102, 104, and most for most public housing authorities beginning January 1st, 2027. So there's going to be a minor shakeup there in terms of what's considered income and assets. And so it would be important to take a look at HUD's notice PIH 2026-15. And I'm going to post a link for that as well, so you can look at the updated income and assets and their new meanings, okay? This means the housing authorities could temporarily use a different deduction amounts or reexamination procedures, while both remain in HUD's implementation and guidance. The current PHA administrative plan must also be reviewed. So there's a lot of documentation, and that's part of dealing with federal programs. There's a whole lot out there. It doesn't necessarily mean you need to learn it all, but you certainly you do need to keep up with everything, so you continue to qualify. You continue to be qualified to even apply. And I think in this case, a lot of these rules aren't going to affect most seniors. Okay, if it does, it should only be negligible. But if you have a lot of additional people in the home, or you have a number of different sources of income that are new, then this could be a contentious issue for you. Anyways, my name is Jay. Again, my information is at the top of the screen, phone number, website, and we are by appointment only. And the appointments are affordable if you feel you need that. My office should always be a last option, not a first option. If you have explored this and you have sought out your own answers and you have yet to prevail and getting that answer that you need, then only then should you reach out to my office in that respect. All right. I've enjoyed talking with you. We'll see you again. Bye for now.